Hello everyone. Today I am going to provide you with an overview of MCX Natural Gas Technical Outlook for the week 5th of December to 9th of December 22. Prior to starting with the view, we will like to give couple of minutes in order to review the outlook which we have shared couple of weeks back in natural gas and see how things have panned out, and thereafter we will figure out how it can proceed for the coming week. So this is the chart of 21st of November when natural gas was trading at around 513 odd levels. And as we can see here on the charts, the counter has given a breakdown below 550 odd levels. That was a crucial support from a rising trend line support level. And post that breakdown, it gave a sharp swing towards the lows of 400 mark. Since this counter has entered into an oversold zone, a pullback was expected, and that pullback was actually expected to be sold off. So since last few weeks, we have been mentioning that any pullback towards 550 to 600 odd levels can be looked for contra trading shorts. So this was a write-off which we have mentioned earlier, that going forward for the coming weeks, 420 to 580 can be looked as a major trading long and trading short dips. So in line with the view now, if we see how things have panned out in last couple of weeks, then we can see that the natural gas earlier witnessed a pullback towards 600, which was sold off. Then again, in last 3 weeks, it attempted a pullback and made a high of around 616 odd levels before slipping down once again towards the lows of 524 last week. So we can see here that there is a big red candle formed on a weekly time frame in natural gas, as natural gas was down almost 8.5% last week, and from the highs of around 600 plus, it tanked down to end the week at 524 odd levels. So we can clearly see that since last so many weeks, almost 2 months, 600 odd levels is acting as a strong resistance and a sell-off zone. But at the same time, on the lower end, if we see, then we find that natural gas can again reattempt towards the lows of 450 followed by 400 mark, which is going to act as a decent support on short to mid-term time frame. So even for the coming week, the bias remains sell on rise and buy on dip, and we believe that on the lower end, 420 and 400 will act as a decent support. But on the higher end, any pullback towards 570 and 600 levels can be looked for again reinitiating negative bias strategies. So even for the coming week, we believe that this ongoing uh, consolidation between a broad range of 450 and 400 on the lower end, 580, 600 odd levels on the higher end will continue, and one can look for buy on dip and sell on rise outlook at around mentioned support levels. Now, if we talk about few technical derivative strategies which we have initiated based on the price movement and the derivative strategies. So the latest one given in natural gas was as on 18th of November, when natural gas was trading at around 505 levels. Uh, the expiry was as on 23rd of November, so it was a strategy only meant for 5 trading sessions. So it was a market neutral strategy in the ratio 1:1, where we have recommended buying in 500 call as well as buying in 500 put. The total premium cost was at around 46.25. And though we have booked the profit as on 21st of November itself, a gain of around 18,438, but by 23rd of November, this strategy would have given much more profit than what we have booked. So our view was right. There was a strong uh, whipsaws as well as volatility which was witnessed in this counter, giving the profit in this market neutral strategy. The earlier prior to that was is in crude oil, which we have recommended as on 18th of November for the expiry of 15th of December. This strategy is still open, and this strategy bias is buy pullback due. So here what we have done is we have bought 6500 call, we have sold 65 600 call. At the same time, we have bought out of money 6700 call. So this strategy, as per the payoff diagram, we can see will be in profit only once crude oil sustains over and above 7050 odd levels. So that's the break even for this strategy. And as and when it moves up, the maximum gains in this um, strategy will be at around 7500 mark. It could fetch the returns of around 47,200 mark. And at the same time, the maximum loss in this strategy will be if the expiry of crude oil below 6500 levels. In that scenario, the loss will be towards the tune of minus 42,800. So technically, we are still holding this strategy. Last week, it ended in red, down minus 11,300 mark. But since the strategy is as on 15th of December, we are still keeping up the strategy open. Another strategy which was shared on 14th of November was in gold when it was trading at 52,580 odd levels. At that point of time, we have initiated a kind of bull spread, buying one lot of 52,500 and selling one lot of 53,000 mark. The bias was that the counter which is trading at 52,850 should end over and above 53,000 mark by 24th of November. And in line with the view, the expiry was over and above 53,100 mark, giving the maximum return of 25,700 per lot in this strategy. Another strategy was again in crude oil way back in 2nd of November when crude oil was trading at 50,750. So at that point of time, we have also initiated a positional long strategies in gold and silver, giving much higher targets. But at the same time, for the traders' point of view, we have initiated a bull spread where we have recommended buying in 50,000 call and selling in 51,000 call. So it was a conservative long strategy where the maximum profit was around 44,000 mark. In the case if the expiry of 24th of November for gold was over and above 51,000 mark. So in line with the view, we have witnessed a sharp up move in gold. A partial profit of 23,000 was taken as on 9th of November and the final profit of 38,000 was booked in this strategy. So these were the few strategies which we have recommended based on the price, the volume momentum. If you found our content relevant, you can contact us on the given mail ID, the contact details for our future reports and the strategies. Thank you very much, viewers, for your precious time.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.